Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, gold dropped in value. Crude has gone down. What are the prospects for gold and crude right now?
Well, yeah, I'm bullish on gold longer term, but obviously gold has been in a downdraft since late August. It's been slowly kind of snaking its way lower with a series of sell-offs and little rallies, and it's under pressure again today, and gold miners are down, 3%, GDX, GDXJ. It's just kind of a steady stream of selling, and I think a huge part of it has to do with the big rally we saw from May, and things got a little overdone, and the markets all just, they get exhausted after a certain amount of time, and really gold hit our measured move based on the previous price pattern and Fibonacci extension analysis. I mean, everything pretty much moved to the resistance levels that which is where we actually exited a lot of our positions, and now the market's taking a breather, and I feel as though it's probably got another week or two, maybe even 3 weeks of the metals kind of floundering and trading sideways or lower, but I think it's setting up for a very big move to the upside longer term here.
Gold miners, are they still a bargain for people?
I think they are. I mean, if you look back at the long-term chart, like the weekly or monthly chart of gold, for example, it has broken out of, a 6-7 year basing pattern, and it is in a true bull market. And then you look at the gold miners like GDX, GDXJ, they haven't broken the 2016 highs. They haven't broken out of that multi-year basing. And so technically gold miners are still extremely early in their cycle. They're not even in a bull market yet. A lot of people say they're in a bull market, but in reality, in the size of the pattern that it has been trading in since the top in 2011 and the big base, there's a lot of upside potential in gold miners, and gold is leading the way simply because, to me, it's the global safe haven. Countries, everyone in different countries is just buying what they know is a true safe haven. So gold is broken out already. The miners are the more speculative play, more weighted towards North American traders. So I think there's just a lag. I think there's true fear, and money is moving into the real safe haven, physical metal, gold. But the time will come where I think we see miners explode and just go ballistic. So I think it's still early, and there's a lot of upside in miners.
Crude oil, is it moving anywhere?
Crude oil has had a lot of mixed signals really since May. It's been really chopping around, pretty wild. Overall, it is trying to hold long-term support here with the continuous contract around this $51 per barrel. If it can hold that over the next week and a half, as long as we can see it hold that level during a cycle low, I think we're going to see a pretty strong rally back in crude oil, and it could go all the way up to $60, maybe $62 per barrel. So there's some good potential there. And it's interesting that, we're seeing the Canadian dollar hold up really well. And a lot of times the Canadian dollar follows suit with what crude oil does. Not always 100%, but the Canadian dollar is holding up really well, and the cycle analysis for crude is pointing to higher prices. So those two things kind of lining up at this point are kind of tipping the hand, saying, hey, I think crude oil might actually start to perform a little bit better, but it still has to hold up over the next week. It's still in a bearish pattern, short-term bearish pattern, and there's a downward cycle in crude oil prices. So until that cycle it has bottomed, we got to be really weary of where crude could go, because if $51 per barrel is broken to the downside, then we're going all the way down to about $45 or $44 a barrel. So it's going to be a massive slide in crude. So that's going to be something big to watch on the breakdown side.
We'll have more with Chris Vermeulen right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, could one of the reasons why the Canadian dollar is holding up so well is the fact that Canada and the U.S. are among the few nations still offering positive interest rates?
Yeah, for sure. I mean, you look at how many negative interest rates. I really didn't realize how many countries were doing it until just a couple of days ago. I didn't realize it spread that far. I typically don't follow interest rates or currencies too much, so yeah, it was really eye-opening when you understand that, Canada, U.S. are really, the two majors and known as the kind of the safe haven currencies. And that could be definitely a big reason why potentially the Canadian dollar, the loonie, is, it looks like it's on the verge of breaking out and starting a new uptrend, which would be, it'd be a really nice thing, I think, for the Canadian dollar here.
And is it nice to have a stronger Canadian dollar in the wintertime when Canadians have to import so much of their food?
Yeah, for sure. And also there's where I am here in Canada, we've got the snowbirds, and half of our town disappears to Florida. So it makes the conversion living down in the States just a little bit better, because everybody goes to the heat, all down to the panhandle there.
Now, of course, Canada looks at itself as an exporting nation. Is a 75-cent dollar really something that's about the right balance between affordable to buy from outside the country, but high enough that we can import goods at a reasonable price?
Yeah, I think it's pretty good value. I don't do a whole lot on that side of things, but it doesn't seem to affect too much. If it was lower than 75, it really makes importing and going to the States really expensive. But this seems to be manageable. It's not like everyone goes on holidays and buys everything, imports everything. So it feels like a balance, a nice balance at this point. But we'll see what happens. If I have a feeling we're going to see some pretty big commodity and currency moves here. And it's going to be interesting where things are 6 months from now, where the U.S. dollar is, where the Canadian dollar is, and crude oil as well. It's at a big tipping point here. All these things, I think, for some pretty decent moves.
Is natural gas on the verge of making a big move?
Yeah, I like natural gas a lot. Looking at long-term charts and cycle analysis, natural gas is carving out a bottom, much like we saw in August. Cycles bottomed out last week, and right now it's just prices struggling between the bulls and the bears. We're seeing some pretty big volume spikes and price spikes in natural gas. Overall, it looks like it's primed and ready to continue to move higher, go up to those September highs, and I have a feeling that we could see this run have more momentum this time, where we actually break the September highs, and we could see natural gas start more or less what could be the start of a new bull market for natural gas, which is, interesting because it's struggled a lot over the last year or so. So this reversal could be really significant, and we could see one of those big spikes that we saw in 2018, where we just see natural gas go ballistic based on weather. The Farmer's Almanac is calling for lots of snow. cold weather. So it'll be interesting to see how natural gas performs. But at this point, with seasonality, cycle analysis, price patterns, everything is playing out that natural gas is primed and ready to start another rally.
We'll have more with Chris Vermeulen right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, the latest business news is that China wants more talks before signing what they're calling phase one of a trade agreement with the U.S. Do you follow things like that, and are they much of a factor, or has it been bouncing around so much you've learned not to pay attention to the U.S.-China trade talk rumors?
Yeah, I don't really pay too much attention to news and things like that. Obviously, it keeps rearing its head in tweets and things, so it's hard not to hear about them, and they do move the markets. And then, last week and this week here, we're seeing a pop on everyone bullish about something coming together with these phases, these stages that they're talking about. So it obviously affects the market, but news is 100% random. You don't know what it's going to be or how big it's going to be. So I don't really focus on it too much. But right now we're seeing the stock market, like the SP 500, it's pushing up, rallying up to this. It's trying to get to 3,000, and to try to hit those September highs. And, I usually news-based moves fizzle out. And the fact that the equities market is getting right up into resistance, it's a little overbought, and this move happens to be based on some news, makes me feel as though we're going to see a quick pullback here, probably start by the end of the week, and the markets are probably going to struggle. So it's going to be interesting how things shake out, and how the tariffs, all these things are going to play into all this going forward.
Anything happening with Bitcoin?
Yeah, well, Bitcoin looks like it's trying to carve out a bottom. When you look at the chart of Bitcoin, it has had a big drop there in September. It's trying to build a little base at this point. It actually looks very similar to the base that it formed from December into March and April here. So it's got like a mini little base, and if it can find support over the next session or two here, it is fading down into a short-term support zone. I think we could see it primed and ready to have a pop, and currently trading at 8,175. If it does have a rally here, I think we'll see it run up to around 9,400. So there's potential for about $1,200 a Bitcoin to the upside here, but support needs to be found in the next couple of days, and we don't want to see Bitcoin go under 8,000. If it goes under 8,000, look out, because we're probably heading down to about 7,000 or even 6,500. So it's kind of in this limbo move. It needs to start to run higher here, and I was actually thinking about potentially getting long as the shorter term charts can show signs that things are reversing. But if it breaks or closes below $8,000, I think you want to either get out or you want to short it, because I think it'll have a very sharp drop to the downside.
Are millennials still in favor of Bitcoin rather than gold because it's a high-tech item rather than the oldest currency on the planet?
I would think so, just because it seems to be more their thing. I mean, I know I've got a good friend who runs cryptocurrency, helps run it, and he's deep into it, and he's told me how so many people have just kind of given up on crypto, and he's much younger than I am. He's about 26, and it's definitely done a lot of damage. This big correction where everyone thought they were millionaires and then realized they're not anymore, back from the $20,000 an ounce Bitcoin. So a lot of damage has been done. gold seems so old and archaic, I think, to millennials and owning physical metal, and it feels like a very different beast. And I prefer metals versus the Bitcoin, the digital currencies myself. But it's definitely caused a slowdown in the excitement in trading digital currencies. People finally realized that, you can't just buy it and own it and become rich. You actually have to actively trade it and exit to pocket money. So I think a lot of people learned some lessons that you have to trade. You've got to know what you're doing to make money in digital currencies.
Chris, how would you sum up the markets right now?
Well, looking at the overall markets, I think everyone needs to be aware that the major indexes like the S&P 500 there's not much more upside potential in terms of the big price patterns they've formed. It looks like large head and shoulders cycle analysis over the next about a couple weeks, 3 weeks or so, looks as though we could see the equities market roll back over. And based on the analysis that I actually have a breakdown happening very similar to what we saw last October to December, which was that huge sell-off and then about a month long of sideways trading range and then that December crash. And that is the type of momentum that has built back up into the indexes right now. If they break to the downside, I would expect a huge drop, and you've got to be really aware. You don't want to be holding these equities if the S&P 500 is going to be closing below, 2850. If it closes below there, it could get really ugly. On the flip side, because it's in a pattern and it's stuck inside a pattern, if the S&P 500 can start to break into new highs, we could see an expansion rally, and of course you want to be long if the market's breaking out and going to new highs. So, we're stuck in one of these patterns again, just like we were in August. We have to wait for a breakout, see which way it goes, and then you follow suit. And based on analysis, you can find out where you should be trimming off and closing out some of your positions to lock in gains, and where to place your stops. So I just think investors longer term need to be aware of where we are in this cycle, that things can get really ugly for equities. And of course, that would be bullish for metals. So there's going to be some big trends taking place here.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.